And there is definitely a price improvement in Bitcoin, even when adjusted, which suggests that Bitcoin has become a safe haven asset, along with gold, for people to move their assets, or some of their assets, to in times of geopolitical uncertainty.
Hello, you're watching Proactive. I'm joined by Bradley Duke. He's European head at Bitwise Asset Management. Bradley, good to speak with you again. And we're chatting about Bitcoin and its performance so far this year, I suppose, relative to other assets, because we saw those new all-time highs a few months ago. Since then, it's kind of pulled back and seems to be trading water.
Yes, yeah. Hi, Stephen. Thanks for having me on. And yeah, the Bitcoin has really performed very well this year, especially when compared against other major asset classes. We have seen around almost 50% return for an investment in Bitcoin since the beginning of the year. And that compares very well against the next largest the next best performing asset, which is gold, which has returned 27.7% since January. And then, really Bitcoin's performance is far superior compared to major investments like equities, the MSCI World, or against the S&P 500. Those are around respectively 17 and 20% return since January. And really has outperformed global commodities, or basket of global commodities, significantly. And Bitcoin itself has outperformed its peers in terms of other cryptocurrencies. At Bitwise, or formerly ETC Group, our DA20 product looks at has a basket of 20, the top 20 cryptocurrencies, and which are capped at a maximum of 30%, and that has had a return of 16% since the beginning of the year. So Bitcoin on its own has really outperformed its peers.
So Bradley, we had the Fed cutting interest rates by 50 basis points last month. I think they have warned that we may not get another 50 basis point cut at the next meeting, but still more cuts are expected. How does this play out for cryptos and for Bitcoin?
Well, it's a good question. And so, yeah, as you mentioned, I think it was the 18th of September, the Fed made a larger than expected cut of 50 basis points. And I think the market expectation is that by the end of 2025, a total of 2%, of 200 basis points will be cut. The expectation is an additional 75 basis points before the end of this year, and then in 2025, 125 basis points. This is over and above the 50 that's already been cut. What will be interesting, and what we're watching, is whether or not the US will slide into recession, or that globally there will be a recession. And typically what happens when there is a recession, the Fed tends to cut more. On average, if you're looking at past recessions, the Fed has cut around 340 basis points, so an additional 90 basis points over what the market is currently expecting. And so this is in terms of how does this relate to Bitcoin. Well, so we've sort of charted what money supply expansion versus rate cuts, and really to see that rate cuts lead to expanded liquidity, and an expansion of money supply. And of course, this plays into the whole Bitcoin debasement narrative, which is says that the dollar and other major currencies can be expanded and effectively debased by expanding the money supply, whereas Bitcoin, that cannot happen. So overall, it's a better money, and it's a place to invest as a safe haven, or as a way to retain value when there is an expansion of the global money supply. So yeah, so that's of course. This is not investment advice. This is just, we're just looking at what's happened in the past and what looks like it's coming on the bend, and how historically that has played into the narrative with Bitcoin.
Bradley, how about some of the risks that lie ahead, perhaps for cryptos and Bitcoin, and specifically geopolitical risks with the escalation of tensions in the Middle East?
Yeah, I mean, I think that even last night there's been a real escalation in the story with Iran sending in those missiles into Israel, and I think there is a worry that this is going to continue to escalate into perhaps out and out war in the region. And of course, what we've seen in the past is typically people, when there's geopolitical risk, there's a flight to safety. What we have seen happening is that the flight to safety historically, of course, has always been to gold. We have seen that now people also go to Bitcoin. Of course, since the Fed cut, Bitcoin prices has grown quite nicely, and this of course is driven by the belief that the expansion of the money supply would lead to some debasement. And then we saw a bit of a sell-off last night based on really on the announcement of all the people seeing this escalation happening in the Middle East. But I think that's just normal behavior when people sort of responding in knee-jerk reaction to the news. But when we've looked at geopolitical events in the past, and then mapped out what Bitcoin's performance has been in and around those geopolitical events, we have seen that there has been above average returns following major geopolitical risk events in the past. And that's even adjusting for average performance. And so that this is our analysis reveals that there's excess performance of Bitcoin is still positive over geopolitical risk events. We have a chart that looks forward 50 days and back 50 days, and then maps the max and the median through that. And there is definitely a price improvement in Bitcoin, even when adjusted, which suggests that Bitcoin has become a safe haven asset, along with gold, for people to move their assets, or some of the assets, to in times of geopolitical uncertainty.
Well, let's hope it doesn't get to that, Bradley. But thank you very much for your insights as usual.
Thank you very much, Stephen.
That's Bradley Duke. He's European head at Bitwise Asset Management.